Hello, everyone. Good afternoon. Comments are working again. Hi ho. Hello, Patrick. Patrick, quick draw. First one in. Daniel. Second in. Good evening, Charles. Jacob. Good afternoon. Hello, George. Yes, there is very little news tomorrow. Well, there's crude EIA numbers and the mortgage stuff, but not really anything else. PMG, good afternoon. Sterling rode the Russell up for a 12.5% day today. Well, good job, Sterling. I saw you posting about the tick all day. Are you becoming our master of the tick after our tick lesson yesterday? Hope nothing really gets me aggravated. I want to be ticked off today. I plan on sleeping in tomorrow. Set my alerts for my trailing stops. Thursday should be fun. CPI Thursday. So we'll get Bob's take on that. Bob will be on very shortly. Options 22. Thank you for being here. All right. So, as already talked about with via George with no news tomorrow, hopefully we rally. We have mortgage stuff coming out at 6 a.m. And then it's just your EIA figures coming at 9:30 Central. Then you just got some bill and notes auctions. So there pretty much is nothing ahead of 7:30 release of CPI Thursday. So CPI Thursday is going to be key. That's where we sit. What else do we have going on? Stock market. Amazon up pretty hefty today. That did some of your big mega cap lifting today. Meta was up nicely, by the way. Facebook. Other than that, you had some mixed. Tesla, a little pullback, little rebound in your healthcare diagnostics, little rally in your financial and some banks, little rally in some energy. You can see here with the groups consumer cyclical and basic materials leading the charge higher, followed by comms, services, and healthcare. Then technology, Fed watch close to 80% for that 25 basis point for Feb 1st. Fear and greed still solidly in neutral mode. All right, earnings after close, nothing before the open. There's not even earnings tomorrow morning, so it's extremely quiet. KB after the close tomorrow, and then we roll into CPI Thursday. Nice day, up 72 basis points so far in the S&P. NASDAQ up 87, Dow up 54. Russell leading the charge up 145 basis points. All right, so let's see here. What is that? There we go. You played chess instead of trading? Well, there you go, Coco. Let's bring on Bob. Let's just bring on Bob, see what Bob has to say about everything. Here we go.
What's up, guys?
How you doing, Bob?
Good. Tired.
You long?
Stop it. No, I am flat.
You're flat?
Yeah, I am flat.
Flat going on to the CPI Thursday?
Yeah, I told you guys I was going to get out after Now Farm, which is what I did.
We have to verify it, Bob. How is Coco supposed to know?
How's Coco supposed to know when he's done playing checkers? I don't believe he was playing chess.
He was playing checkers, huh?
Yeah, I don't believe he was playing chess. Hey, there's Royal Palms. Royal Palms had a couple questions in the Discord.
All right. Good afternoon, Royal Palms.
Sorry, guys. Didn't sleep well last night. One of the questions was first of all, it was on bank earnings. Royal Palms was asking if, I think he was I should just read it. I can read it instead. So this way I'm positive that I got it right. Discord questions for Bob. Hey, Bob, I was thinking banks may have bad earnings if many have defeated or defaulted in loans, etc. If many have defaulted in loans. I assume that means if many have loans in default. Could you give me your thoughts on this? So yeah, last quarter, okay, so let's go back. During COVID, the banks took a lot of loan loss provisions. Oh, excuse me, for bad loans. Um, then as we came out of COVID, they kind of let those ebb away. So just for the purposes of earnings, when banks put aside money provisions for loan losses, those come out of their earnings. So they are likely to have weaker earnings if that's the case. So I don't have a prediction of whether that's going to be the case or not. I would say that I think the local banks or the regional banks are likely to have more loan losses than the big banks are, although Morgan Stanley and Bank of America were both very involved in giving loans to Elon Musk for buying Twitter. So they may have loan loss provisions that they're setting aside for that money, since they obviously locked in the yield and they probably didn't hedge because bank traders. Anyway, so I'd watch those two more specifically than anything. Oh, excuse me. Again, I don't know if I don't have a prediction as to whether there's going to be large loan loss provisions or not, but definitely watch Bank of America and even more specifically, I think it was Morgan Stanley. It could be J.P. Morgan. I forget. Um, it's one of the two, and I can look it up. But before speak to it on Thursday. But I want to say it's J.P. Morgan. Let me take Morgan Stanley off the table. No, I'm sorry, Morgan Stanley. I don't think it's J.P. Morgan. Anyway, so that's number one. And if they put aside money for those loans for what they think is defaulted loans, then yeah, their earnings will suffer. But again, I think the regional banks are going to have a bigger problem with that than the big banks. The second thing was also wanted to know how much does housing and banking play into the CPI? Well, banking doesn't play in at all. The place that banking plays in to the CPI is on debt, and if that debt affects the price of housing, but not necessarily of housing within the CPI. The CPI is about 1/3 housing, but they don't calculate loans or what people pay for houses. They survey about 50,000 homes and they count cash rents that are paid, plus any subsidy from the government, plus anything included in those cash rents. So, for example, if you rent a place and the heat is included or the electric is included, that gets counted into the CPI housing figures, which again are 1/3% of the CPI. They also calculate something called owner's equivalent rent. Okay, so if you own your house, let's say you buy a house and you pay $400,000 for it, and then 5 years later, they don't look at your house and say, okay, that cost you $400,000 over 5 years. Okay, they do something called owner's equivalent rent, where they poll the owners and they try and calculate how much the owners would have had to pay to rent that house. Now, there's a lot of speculation as to whether or not that's a good metric. I'm going to say it's not, because it's just done through polling, and people who own something tend to think it's more valuable than the market does. But they replace about 1/6 of it every 6 months. So they poll the whole time, but then after 6 months, they replace 1/6 of that polling with some of the newer polling. Now, the reason is rents don't change every month, right? People sign a lease and that lease stays the same. So you would think that even if new rents are coming down, the CPI is likely to overestimate where rents are at. And if new rents are going up, the CPI is likely to underestimate where they are. So there's a lag in that, a little bit of a lag because of that 6-month wait time. And that's every 6 months, they replace 1/6 of it, not all of it. So it's a bit of a complex metric, since part of the reason a lot of people don't like CPI, and I think it's part of the reason the Fed pays more attention to PCE and the public pays more attention to CPI. CPI is more important for things like Social Security checks and some of the other things that are adjusted to CPI, directly to CPI. So hopefully that answers your questions. I'm not sure.
Well, Christo, my apartment building just sent me the annual renewal 10% increase. So his Rent isn't going down.
Yeah, I mean, most leases have a percentage that they can go up, or they don't renew, and then they raise it to the new people. So, for example, I had a 3-year lease here in Florida for a while, where the maximum it could go up was 5% a year. So, if you sign a long-term lease, it's usually built into it.
Bob, with oil down, what is your take on CPI Thursday? In line?
Well, oil, I mean, I guess oil was down in toward the end of the day, but it actually it cleared two handles today. Went through the 74 handle and the 75 handle. But Shashi, you're asking about the past CPI number. People are going to be looking at core anyway. Everybody knows that oil went down. And natural gas went down as well. So when you look at it from that perspective, everybody's going to be judging based on core anyway. They're not going to be just judging based on the headline number. So I wouldn't worry so much about energy's effect, because you are looking, and I said this before, I said you want to look at month over month core. Had to be a month or two ago where I said that, where you want to start ignoring year over year because you're going to get base effects, and check out month over month. And you want to look at month over month core because energy has come down. I mean, crude oil specifically has dropped almost 50% from where it was, that 130 spike. So it's a very big move. So I don't think it's going to matter as much based off of crude oil.
Where else? Yeah. What's this attack? All of a sudden, they're talking about banning gas stoves. New York governor proposed banning natural gas in new buildings. When did natural gas become a problem?
It's carbon. It's carbon. Even though it's a cleaner burning carbon, it's carbon. But what happens is if they ban natural gas, you start to burn more coal. Coal gets burned immediately to replace the electricity that's driven by natural gas right now. Honestly, the climate activists have lost their damn minds. They really have. I saw a story today that said that if you own a pet, you're damaging the climate.
Well, I'm really damaging it then. But do I get offsets because I drive an EV? Look,
Yeah, I mean,
I'm offsetting my 5 dogs with an EV.
That's not enough, Mikey.
All right, do I have to buy 5 EVs?
Yes. EV per dog you have to do.
Oh, gosh. Bob, Mike, one must go. SEC, EPA, or FDA?
Oh, God.
All of the above?
Yeah, all of the above. I mean, probably at this point, I'd say SEC because they don't do anything anyway.
They're useless.
They're useless. So
literally.
Yeah.
I mean, unless you did some $10,000 insider trading deal, then they're going to come after you. But anybody big, nah, we're just going to ignore those. So, hey, Donald.
We should do the FMK game with those three.
Let's see. Well, I saw that earlier. Republicans in the House of Representatives would vote on a bill that would abolish the IRS, eliminate national income tax, replace it with natural. Because I've talked about natural consumption tax forever.
Yeah.
Can we just get there? Because then you can. It doesn't matter where your money comes from. You buy more, you pay more, you get paid cash underground. It doesn't matter. Right. It doesn't matter. You dig up the currency in your backyard. It doesn't matter.
Yeah. So the people who are against that, Mike, say that there'll be a bunch of cash transactions to avoid the consumption tax. That's why I just think it's a flat tax on income. I don't care if they graduate it. For me, a flat tax on income, no deductions. That's it. It's 0%, 10%, 18%. Done. That's it. No IRS, no accountants, nothing.
See, the reason I like a consumption tax is because, for people who don't show any income but already get everything from investments and everything else, they consume a ton, so they're paying taxes.
I don't know. Do they consume a ton as individuals?
A lot of them do, because you buy a plane, you'll even lease a plane.
That's true.
Come on, you have
got to include leases in there then, because they'll just lease stuff.
You know what? We'll figure it out. But this is to get rid of the free. Let's just start with getting rid of the IRS.
I like either one. Oh yeah, the IRS is the biggest waste of taxpayer money out there.
Let's
The
just
only
start
argument
there.
I'll listen to is that a large part of the defense budget might be a bigger waste, but I don't think so. I think the IRS is way bigger of a waste. IRS gets bigger every time they change the tax code because there's people adjusting to the new tax code. It's ridiculous.
It's absurd. There's
Mhm.
no reason, and the tax code you can't even figure it out anymore. All right,
I
Bob.
did see.
Do you think inflation will increase in 2023 at all?
That's a weird question because if you're talking about the consumer price index, yes. If you're talking about the rate of change of inflation, I'm going to say that for the first half of the year, no. But those are two different things. When you say, is inflation going to increase? Are you asking me about the rate of change or the consumer price index? If you clarify, I'll be able to answer it better. And the reason I'm asking that question is because many people think that inflation is what we're going to get when CPI is released. And that's not what inflation is. That's the rate of change in prices. And it was up.
Uh,
It was up, lad. People were like, oh, inflation's down. No, it's not. It was up. It was just up less than the previous.
Bob, did you see the New York Times article talking about how women should marry shorter men to be more green?
I did see that. I couldn't stop laughing. It's like, I don't want to say this, but I'm just saying, try and convince women to do that. Go ahead, give it a shot. As a 5'9" guy, believe me, try and get them to do that. Hilarious.
All right. Let's see. The CEO at JPM, Jamie Dimon, just said Fed may very well raise interest rates to 6%. Well, the Fed's, I mean, they've been banging on the drum. It's 5 to 5.25 still with yesterday and everything. What did you have any other? We can't really talk about Powell because he didn't have any uh, thing to say about anything today besides climates. You know, we're not going to be a climate activist. Bob, did you have any take off the recent Fed speaky?
Not today, no. I
No,
mean,
from yesterday.
I mean, they're still talking the exact same way. I mean, essentially, like I'll take Bostic for example. Bostic basically said, "I'm not in the pivot camp. I'm not a pivoter," is how I paraphrase what he said. So they're just, it's very easy to say that stuff when you say you're data dependent. So their words are getting less and less effective, just like anything in markets, right? We used to say that with terrorist attacks after 9/11. That the first one just absolutely destroyed the markets. Then the next one hit the markets. Then the one after that hit the markets a little and started hitting it even less and coming back even quicker. That's what's starting to happen with the Fed speak. They keep saying we're going to stay the course. The market believes them less and less.
All right, Coco. So CPI comes below estimate, inflation keeps going up. How will the markets react?
Well, I think the market's going to continue to assume that the Fed will pivot if the rate of change, the CPI, comes in lower than expected. Because your average people look at the rate of change of CPI as being the important thing. As a matter of fact, when the Fed talks about keeping inflation at 2%, they're talking about the rate of change. So the closer that number gets to 2%, the less aggressive people think the Fed will be. So, but right now, again, they're pricing in rate cuts. So to what Mike asked me earlier about the Fed speak, the market is pricing in rate cuts, and the Fed is saying we are not cutting rates. So that's slowly becoming the more important thing to me than CPI. Not just where inflation is, but will the Fed cut rates in 2023 or not? Market says yes. Every Fed speaker says no.
But the Fed has more credibility, doesn't it?
I mean, you know what? So far they do, to be honest. I mean, so far they do. Many people didn't think they'd go this far, right? And I
Still
was
not
listening
believing
to
them. They're still not believing them that what they're
a
saying now is true.
lot of people don't believe them. I saw an interview, just a clip of an interview with Michael Taylor. He was on Hedge Eye. Michael Taylor basically said that the Fed needs to drive the economy into the ground in order to make the debt service affordable down the road. In other words, the only way you can get rates to where you need them to make the volume of US debt that we have serviceable over the medium to long term is to stay the course with rates higher and higher for longer in order to drive the economy into the absolute dirt, in order to then be able to take us back to zero to service the debt.
Interesting.
Yeah, that was something I hadn't heard before. And, I've been on in the camp of saying that Powell was going to hold rates higher for longer than the market currently thinks. And part of the reason I was in that camp is because of our conversation on the podcast with Michael Farr, who knows Jerome Powell personally for 40 years. And his description, and I'm paraphrasing, basically said, if there's a brick wall and Jerome Powell says, I'm going to get through it, and you tell him you can't get through it, you come back a month later and he's still trying to go through it. It's basically that he's a stubborn guy. So that's what I was basing it off of. But this Michael Taylor story, I shouldn't say, this Michael Taylor opinion is very interesting to me. I don't know how accurate it is or whether it's going to come to pass, but it's a very interesting opinion.
Panvit, Babasune, Pavneet, sorry, Pavneet. Assuming earnings are moderate to a bit underwhelming, but not drastically down, do you think Q1 or Q2 still sees new lows?
I do, because if you guys remember, I said that the fourth quarter earnings wasn't going to be the bad one. It was going to be the first quarter of this year's earnings that was going to be the bad one. Now, so far, the data is not backing up what I said. Okay, data has been surprisingly strong if you're not looking at PMIs. But that services PMI was ugly. So that kind of goes along with what I'm saying. So, yeah, I do still think that. And it won't change until it changes. Since I'm on here every other week, I can tell you guys when it does. But keep asking the question because so far it hasn't.
Daniel thinks risk premium for recession does not look priced in. Happy Jack, welcome. There's a fine line between stubborn and stupid.
Yeah, again, Jack, I don't disagree with you, Happy Jack, but the issue with it is that if you look at what the Fed's mandate is, not what we wish it was, and I don't even want to include myself in that. The Fed's mandate is stable prices and full employment. And not only do we have full employment, we have fuller employment than we did last month if you're looking at the unemployment rate at 3.5% with an increasing labor force participation rate and increasing wages. Although they increased less than the previous month, they still increased. So what's left? Even if inflation, and I'm talking about the rate of change, what we're going to get tomorrow, even if inflation is sitting at 4.5% or 4%, that's still double the Fed's target. So what are they supposed to do? They're supposed to say that's good enough? I don't know. I mean, a lot of people, Jimmy Iorio is one of them. A lot of people say that, well, they have to understand that they're going to drive us into recession. They mean to. So I'm not sure that that's necessarily stupid if that's what they're trying to do. If that's what they believe is the only way to achieve their other mandate, then it becomes Congress's fault, like everything else, because they're the ones who put the Fed in charge of only these two things. If they wanted to do their worst, they could say, you have a third mandate now. We voted on it in Congress, and it's full employment, stable prices, and a strong economy. And then this would be gone. Anyway, I don't know.
George asks, does the timing of Q2 earnings possibly line up with the yield curve approaching zero?
Nah, I don't think so. I think we're going to have an extended period of an inverse yield curve. And you remember this, and Mike researched this. I researched it separately from him. And then I actually heard, no, I can't remember her name. She's on Bloomberg all the time, say that Oh, I'm sorry. You know who else said it? It was Cameron Dawson, but also somebody on Bloomberg said there isn't really a correlation as to when the recession begins based off of the inverted yield curve. Inverted yield curve predicts recessions, but there's varied amounts of time as to when the recession actually begins after inverted yield curve. So,
Bob, with elections next year, do you think the Fed will be pressured to cut rates and not drive economy into a recession, or will taking inflation down still remain the higher priority?
we have elections next year.
Well, what is it? 2020? Yeah, we have in
2024.
2024. It's
Oh, yeah,
2023 now.
I forget that. I mean, they're a ways off. No, it's not within the Fed's mandate. So, will they be pressured? I mean, today Jerome Powell spoke about the independence of the Fed on the panel. And he said it's important for the Fed to be independent so that their decisions are not politicized. I'll leave it at that. Um, Also, by the way, many people talking about that said, or many analysts and people that I spoke to said, yeah, no one believes him when he says that. So I guess it depends on where the economy is, Pavni. If the economy is still doing fairly well, which, I'd say it's okay right now, then he'll probably stay the course. But I still think, and again, I have no backing for this at all, that in that meeting between President Biden and Treasury Secretary Yellen, they basically said, you're on your own on inflation. And when he left the room, he basically said, okay, you got it. You asked for it. Here you go. And he's kind of mad at them. I don't know. I made that up in my head, but that's how I like to think the way that it went. I do. I like to think that that's what happened.
All right. So, anything else on your mind?
No.
No, besides a nap.
Yeah. Well, I'm not able to do that, but yeah.
Bob and Mike, other than circuit breakers in the markets, what else has been added to help tamp down panic in the event of a severe and rapid market downturn? What else has
I'm not sure.
been
We
added?
don't know of anything you guys don't know of.
Uh, I don't know of any.
Yeah, we don't. I mean, that's look.
Are you asking
Curve,
what else could
trading
prevent?
curve.
What else has been added to prevent like a crash where circuit breakers could come in? I I don't know. No idea. You know, crashes aren't very often,
No.
especially ones where the circuit breakers kick in. All right, so I think that's about it. We'll let you. You seems like you need some more espressos, Bob.
Oh, it's just a lot going on, buddy. So not a lot of sleep's not a big part of that.
All right. Well, we will talk. Are you back? Well, this is the last time we'll see you before CPI, and then you'll be back on Thursday afternoon.
Yep.
All right.
All right, guys.
All right.
See you.
Bye. All right. You're just stuck with me, and this is. I went way too long last night. Although Sterling seems to be working on the tick. If you're not following us on Twitter, a path trading on Twitter, you should at path underscore trading. See what Sterling does 99% of the posts out there. So that's where we sit. I'm just going to do a quick review. I'm actually very tired also. So nice up close today. Again, the S&P up. The Elon number, we got 69 basis points, so it must be related to Elon. Although it's not 42 or 420. So let's see. I'm just watching for either the key support to hold. Key support to hold. Overnight, I'm going to be watching this 39.35 level. If that drops below, then I'm focused back on about Friday's highs of 39.28. Then today's open area. What just happened there? today's open area of 39.14. So that's where we sit there. Daily cycles up at the top, getting close to overbought, but still running up, expecting more of an upside. Weekly cycles still running up. I'll get really potentially interested when we get weekly cycles at the top and rolling over, and daily cycles rolling over at the top. So nothing's changed with my overall targets. Still targeting the 200, somewhere between 39.8425 and 40.33, with the 200 coming in at now 39.95. So I've laid out my game plan multiple times. Nothing has changed. NASDAQ, after triggering barely the double yesterday, still marching on up. Nothing has changed. Watching for a retest of the 11,390, 11,400 area. Then if we get a breakout with CPI, 11.5, then 11.6. Key support for this, I'm pulling it back just a bit to come in about 11,182 to 11,200 for my support overnight. The Dow, marching on up, gonna be watching for this 34.20 area again, then 34.2, then 34.4. Nothing's changed there. First level of support I'm going off is 33.6, then 33 about 485. Russell, which led the day with the power move higher, my target was between the 50 and 62, specifically the 200, which we should probably hit tomorrow, barring anything weird. The next thing that will get me continued bullish is a close above 1845. Then I'll be targeting continued higher prices. Watching for a minor reaction if we do hit the 200 tomorrow. Key support, by the way, now for the Russell overnight and then the pullback is 1818 area. Where do we sit? The DAX finally fully hitting the harmonic today. 14, what was the high? 14,908. 14,911 is the harmonic. Yes, this is a potential double top. I will be keeping an eye on. Far ways off from triggering, but I am keeping an eye on it. That would take us back to the major last breakout area. It is getting very overextended. We have divergences setting up on the daily, and it could go a little higher. We also have potential divergences on the weekly. So it would be not aggressively buying, but in trailing mode. Notes, pretty decent, just little pullback today, but not changing anything substantially. I will be keeping an eye now if we break above yesterday's high. There's a more of a scalpy type trade into the most recent high area. Other than that, not much. Daily cycles at the top. Weekly cycles sort of turning up, but So, and yes, this is a weekly potential double top still, but we'll address that if it goes back down. Dollar index inside day, just consolidating below this 103 level, so nothing going on there. It would be aggressive if we start taking out tomorrow's highs and then close above it with would be a percent beat buy with a return to the rotation zone. So I will be watching above a break above yesterday's highs or today's highs, or a break below the lows for a continued down move. I really like this either way at this point. It's really going to be tight to the upside, so it's more of a scalpy trade there. But to the downside, if we get a down move, broke key support with a 1 pausing bar and then take it out tomorrow, I love that as a continuation pattern. VIX, looking like it's going to be retesting the lows areas, so the double might be off the table soon. Crude, inside day today, so not much else to talk about. Yeah, it's got a little flagging pattern right here. is about all I'm keeping an eye on. But the next rollover, this would not invalidate the potential double bottom. It would just go down to retest this low area. And then really, I'd like to see that actually, because we can validate how strong the support is down there. Natty Gas forming a double bottom. I should say a potential double bottom. Going to be keeping an eye on that. Gold, nothing. Copper, by the way, talked about this on the podcast, finally hit the first target area. Kablammy! Triple cluster in this area. First target from the double, harmonic, and retracement harmonic 50% area. First target is hit. So stop is officially raised on the weekly double. How many weeks since triggering? Let's see. Triggered back on November 7th, so roughly 2 months since the trigger. First target hit. Still watching. Upside price action and then. But definitely stop raise. So that was really nice. 10-year Japanese bonds creeping up a bit. So going to see if they're going to intervene or let it go a little higher before they go there. Inside day. Was that an inside day? Yeah, it was an inside day right now with the yen. So it's still just waiting. We get intervention. We have 2 lows down here. 2 lows. This is technically a mini double bottom. So if that gets triggered, I'd be very patient on the next play before we set up for another rollover. However, we break those 2 lows areas, especially if they intervene, those will probably break. Then it's a break to the downside. So the yen's got patterns either way. Either way doesn't bother me because you triggered this mini double, sets up for another short position potentially higher. And remember, this can take a long time to unfold. Long time. But love to see rallies, love to see because you get to potentially get on short positions higher. Euro, flat. Nothing to talk about in the euro. Daily cycles at the top. Weekly cycles rolling over, so I'm going to be watching more substantially for a pullback, and no, this is not a double top because of this prior top. So if we pull back, it's just pulling back into consolidation for now. Pound, nothing. Bitcoin finally got a decent move on today, so I'm watching for this 17,800 area on continued NASDAQ follow-through. Tesla, pretty much a pausing day, started to break down, catching on that 118.75 area. The exact low was 118.85 and then bouncing up. Nothing yet with Tesla. Although if we break higher again in risk assets, then I will still watch for it to tackle the other side of the daily rotation zone. YouTube PMG. When are we going to get volatility in the markets again? Impossible to make money? Huh? What do you mean? I didn't think today was that bad. We've had some volatility up and down moves. I wouldn't call it lack of volatility. I'd say there's been a lack of a clear, solid directional trading until it looks like we're breaking and going to test some of these higher levels. But we've had some decent volatility. All right. End phase. The end phase double top is complete. The end phase double top was triggered. It's not complete. I mean, unless something came out after hours and it's trading down to 142. Nothing's complete. It is triggered. But again, this is a huge pattern. This can take a long time to also unfold. You're talking 10% moves? 10% moves aren't normal. I don't want a market with 10% moves all the time. 10% moves aren't even normal. Coin has triggered a daily double bottom. It's almost completed and starting to be talked up a potential beneficiary of the FTX collapse. So you're looking for a short-term pop. Also, Coinbase doing mass layoffs. What's Tesla's massive boom in Texas? All right. With that, I'm going to wrap it up for now. Be back tomorrow morning. I have to deal with the dogs. The wife is tied up with work calls, so I have to go get them out and deal with that. So it's not going as long as yesterday, but thank you for tuning in. Again, if you want to learn stuff about ClearPath and Tick, go back and watch yesterday's episode if you did not see it. They have overcapacity. Didn't get why Euro is having a double top. Because remember, it's reversing a move. This was a reversal. This was a double top, came down, hit the first target, and then reversed. Because now you had a 3-top breakout. So, 1, 2, 3. All right, you are welcome, Charles. Thank you for being here, Mike. See everyone tomorrow morning. Bye for now.